Gene, welcome. Is this a thesis-changing quarter for Netflix? Because that's how the market is treating it. Does that make sense?
Makes a ton of sense, Sarah. It is the right question. And it's the right question because what Netflix is, it's a company, a stock, a tale of two cities. One is, of course, the incredible business that they've built, amazingly sticky, 220 million subs. They are world-class at making content, and most would say if you're going to keep one streaming service, it's likely going to be Netflix. That's one side. But we turn the page to what is next, and that is where are they going? What's their next city? And that is based in how many subs that they can grow. And I want to put some context around what the sell-off means here and what is implied and where this could ultimately end up. Is that before the pandemic, Netflix was adding 25 to 30 million subs annually. During the pandemic, that stepped up to 35 million plus. Now, if you take the guidance for March and apply that to the balance of 2022, would suggest we're below 15 million for the exiting pace. This is a growth story. There is one pressure point on Netflix. It is sub ads. And some of their commentary around sub ads was it will be transitional. And when you mentioned that your question is this a thesis changer? And I think it doesn't change the thesis, I think, for someone who wants to invest for 2 to 5 years. But someone who's thinking about investing in 2022 needs to take into consideration that typically when you see these pressure points move in a different direction, that being the sub ad growth, when you see them miss in a quarter with a growth stock, it's rarely done after one quarter. It typically takes 2 to 3 quarters. Peloton is a perfect example of this dynamic. I think Zoom, we'll see how Zoom's quarter plays out. So yes, I think that this is something that people need to make some readjustments. I suspect the June guidance is going to be difficult, and the stock goes lower and then probably starts to work after that.
Now down 26%. And like Peloton, it's wiped out pretty much all of its pandemic gains. It's going to close at the lowest level since April 2020. Gene, my question is about some of these other stocks that are getting knocked pretty hard as a result. I mean, yes, the overall market's down, but in sympathy, Viacom CBS down 7.25%, Disney down 7%. Does that make sense, given a lot of these companies with their streaming businesses are at very different points in their cycles of growth than a Netflix? Or does the whole category just get re-rated and revalued?
No, I think it's the former. I think that it does not make as much sense. Obviously, part of that sell-off is related to the broader market, but call it half or 2/3 of it is related to sympathy selling related to Netflix. We just talked about the importance of sub growth. I mean, that is the pressure point with Netflix, and I think sub growth is really important for those other two companies. And so I suspect that those are ultimately opportunities. And when I use the word opportunity, I do it cautiously. I'm a technology investor. I'm not a market strategist. But when I think about when is the proper point to get more involved here with buying some of these that have pulled back, we talk about Disney, for example. I still think that the Fed needs to sort itself out and give investors some confidence regarding the trajectory and the slope of rate hikes. I think once that happens, I would feel more comfortable at being aggressive with some of these stocks that have sold off.